Welcome. In this video, we will try to understand Bitcoin through the block system. We will track the block structure starting from the year 2000, when Bitcoin began a parabolic rise and an extremely aggressive and violent expansion, and we will finish at the current price in order to understand the physical process Bitcoin is going through right now. We will mark weekly blocks and update their behavior to understand where liquidity exists and where price can form polarity. When I change a block's function to an unmitigated or polarized block, its behavior changes and its liquidity becomes polarized. Confirmation for the opposite side after a break turns the block from an unmitigated block into a polarized one, after it has proven that its function has changed and the block has received confirmation at the COG of the block from the opposite side. COG stands for center of gravity of the block, which is the price range between 0.382 and 0.618 of the block itself. Now we can see that Bitcoin has reached the lower buy block, and it is performing a sprint test below the block. This move is classified as a spring test because of the speed and momentum with which the weekly price returns back into the block's range. This is a cleanup of liquidity and retail stop losses that are located below the block. It is a move that typically comes before continuation. Now, the real test for Bitcoin is what it will do at the block level where the structure was broken. That area contains many trapped traders, and the liquidity there represents a very attractive price range. The liquidity in that zone can create a cascade, either a break and exponential expansion, or a halt that builds liquidity and an accumulation structure of even more liquidity. Accumulation below a level is usually evidence that price is simply storing energy in order to break it. Now I want you to pay attention to what this sell block at the all-time high creates. It forms a very special block. This is called an equilibrium block. Its functionality is very unique and powerful. The pressure from sellers and buyers left a weekly block that is perfectly balanced. Selling pressure and buying pressure were equal, and the block is not only special on its own, there is another one after it that defines it functionally as potentially both a sell block and a buy block. We are talking here about massive force that turns this block into a rippler, repelling force, and an attractor, an attracting force for price. Price will be drawn to it so strongly that the momentum will cause price to pass through it. Its gravitational pull will become even stronger from the opposite side. This is oscillation at its best, at the peak of its beauty and power. You can see how the liquidity created by the block generates a gravitational pull on price, creating very strong momentum, until price eventually crosses it. At that point, the block's polarity flips and its functionality changes character. Above and below the block, so much liquidity is formed that price makes a scissor-like movement, stealing liquidity from both directions and clearing the board before continuation. This clears excessive leverage and stop orders that change their nature upon closure. A buy order that gets closed turns into a sell order, and vice versa. This liquidity provides smart money with additional energy to fuel their move. Okay, let's summarize what the block system is hinting at and what it helps us understand. Bitcoin is trying to find support above the top of the block where it previously found support at the COG. It finds comfort in the strength of the 0.236 level of the price range created by the equilibrium block. A weekly candle will close in one more day. If it closes above the block, there is a possibility that it will establish support above it, or even trigger a cascade of stops and stretch aggressively. Below it, there is a block that did not receive attention. If price closes inside that block, it may be that the liquidity there requires attention, and it should be examined using elements of imbalance between price and volume that the block created. There are many more elements and far more sophisticated analytical methods than blocks alone to understand price movement, but in this video the goal is to demonstrate the functionality of the block system and the logic behind it.